Hello and welcome to Average Traders. Another mad week. We've got crypto crashing. We've got Voyager Digital receiving a 400 million bailout loan from FTX. We've got Coinbase dropping 18% of their headcount. Rajan, why don't you go ahead and tell us?
We got Bitcoin hitting the 17,000 handle. We saw Ethereum back below 1,000. It actually went back into the 800s. I mean, crypto in general just selling off like crazy. We had the S&P almost break 3,700. What is going on? Everything is just going wild. I mean, we're going to try to dissect that today, try to talk through what has been happening, what is leading to all these crazy moves. But the good thing is on Friday, we did have a bit of a bounce. Yesterday, we did see crypto actually hit 17,000 and then bounce back up. And we're actually trading at almost 21,000. So there's been a bit of a nice bounce there for crypto. Ethereum's back above 1,100. So we've seen almost a 300-point rebound in Ethereum. But what is going on? What do you see? What do you see in your end? I mean, I think we clearly know about the main things, the main catalyst that's happening in crypto right now. We've seen some of these biggest funds. We spoke about it last time, 3AC Capital, huge $18 billion fund at its peak, liquidating quite clearly. We've seen whether they can get a bailout. We've seen Babel, which is another one, Deribit, a third one, like you just said, Voyager Digital, getting a 400 million bailout from FTX. It's just bailout central because it's leverage. Leverage has unwound. We've seen a lot of the leverage being squeezed by these huge moves in these crypto, especially, but we're seeing it in stocks as well. So this is what's all leading to everything unwinding here. And also, clearly, a lot of the retail clients are getting scared, wanting to exit the door. So, I mean, what do you see? It's just mad, isn't it?
You see that Tether's market cap has dropped around 18%. That equates to about $15 billion of outflows. But it seems like USDC is the current safe haven as its market cap has increased $6 billion. But it still means a massive $9 billion outflow from these stable coins. And I think if you look at the way that Tether and USDC are different, Tether doesn't keep $1 in reserves for every dollar you put in. Instead, it has a range of securities such as bonds, treasuries, which I guess are seen as more risky and compared to USDC, which apparently is dollar for dollar. What could happen if we have another massive drop? We can't rule anything like that out. It seems like people are saying if Bitcoin drops another around 75% from where it is today, I know that sounds absolute madness, but if it does, then USDC is next. And I guess the main problem, as you were alluding to, Rajan, is the leverage. If everyone kind of goes on a bank run with USDC, it's highly collateralized for every dollar you put in. And if you want your money out, they might not be able to liquidate fast enough. But luckily, at the moment, we are seeing net inflows.
Definitely seeing a bit of stability right now.
But it's just one day.
One day that can change the whole psyche. I mean, we look at the just on CoinGecko here, just looking through the. I mean, this doesn't really tell the full story of what's actually happening in some of these intraday moves. So if we look at Bitcoin's at 20,800 over the past 24 hours, is actually up 7.2%, and it's down 22% over the past week. But if we actually look at it on an individual basis and intraday basis, we actually traded, like I mentioned earlier, we hit a 17,000 handle just below the 18,000 mark before we bounced. And that was just yesterday. And it happened with Ethereum as well, basically all the cryptocurrencies. But if we look at which ones have rebounded the nicest over the past 7 days, or had the best 7-day performance, we're looking at Solana here. Solana is actually up almost 14%, which has been the best performing crypto in the top 10. And then after that, we've had Chainlink at 11%. But most of these, we've got Ethereum and Bitcoin, which has been moving in lockstep, down around 22% over the last 7 days. Stablecoins are obviously stable. Binance has been flat. About down 15.6%, but it's been flat over the past day. Binance has been called under scrutiny in terms of the SEC is now investigating Binance for how they sold some of their coins initially back in 2017 and how they initially raised funds. And now that's been looked at by the SEC, and that could be a precedent in terms of the overall way the SEC is looking at fundraising by these crypto projects. So Binance is BNB is under a bit of pressure. So as you can see, it's just a bloodbath. I mean, we look at where we are relative to our highs. I mean, pretty much everyone, we're looking at around 80 to 95% lower on most of these currencies. But talking about this bounce back, we have seen that these murmurings around Twitter that once we hit into that 17,000 mark, that 17,000 in Bitcoin, that some of these leverage shorts decided to cover or were forced to cover or whatever the reason was. But we definitely saw, if we look at this chart over here, we actually had a really sharp bounce back. we had a really sharp bounce back here from just under 17,700 to about 20,000, pretty much in 6 bars. And so we could see that, some of these shorts, they must have thought, all right, yeah, we'll take this. And that did really help stabilize this market for the last couple of days, at least, which is positive, but we still don't know how it's going to go forward. We know that 3AC Capital still is trying to figure out things with creditors to see if they can get some leeway in terms of paying back some of these creditors, and so they can allow withdrawals once again. We've actually had news this morning from Babel Finance, which also had halted withdrawals, and they have actually announced that they had taken steps to improve its liquidity position. They had reached preliminary agreements with major counterparties on the repayment period of some debts. And this announcement came 3 days after Babel Finance did halt client withdrawals, the same as 3AC. So this is a bit of good news. We're starting to see some of these companies that have been squeezed trying to find a bit of leeway with their creditors to try to give them space to sort themselves out. So this is a good news in terms of Babel, and I think 3AC are doing the exact same thing. They're trying to find things, agreements with these creditors to try to sort out their liquidity position. Because again, all of these were over levered. We actually just saw for 3AC, it was really interesting that 3 Arrows Capital actually bought almost 11 million locked Luna for $560 million. It is now worth $670. So we're seeing the actual ramifications on a daily basis of this Luna collapse and how it's impacted so many of these funds. Because a lot of these funds, Luna was a top 10 cryptocurrency, and a lot of these crypto hedge funds that they had Luna as a large part of their portfolio, and it's pretty much gone to zero. And so again, we've seen the ramifications, and this is all filtering out. And we've seen 3AC, which was one of the largest funds, now trying to sort out the liquidity positions and stuff like this. Stuff that happened in Luna, obviously wasn't helpful. But this is where we stand at the moment.
So yeah, Rajan, yesterday we had our Lord and Savior, Elon Musk, tweet out that I will keep supporting Doge. And someone replied, keep buying it then. And he replied, I am. And literally, as soon as that happened, Dogecoin went up 10 to 11%. And before you know it, all these other coins started reversing.
So did Elon save the market again? Is that what he did?
He has too many strings that he's doing. It's nuts.
I mean, it's a combination of all of these things. We know that Elon loves to get in there with the tweets, especially on the crypto space. So we had his tweet, which obviously might have triggered a bit of a short covering, a rally, and plus the liquidating of some of these large leverage short positions. So all of these in turn have led to a rebound. But the real question is how sustained it's going to be. But you were just saying earlier that Meet Kevin, he did allude to some, in his recent YouTube video, he did allude to some interesting movement in a lot of this crypto, which you can see on the blockchain. And I will share the article. It was actually from the dailyhodl.com, and it talks about how some of these whales have moved around $2 billion worth of Bitcoin on the break of the 20,000 level. And this is all on-chain data. And so we can see over here that there was about 5 equal transactions valued at about $205 million each, were all transferred from Coinbase to an unknown wallet. And then subsequently, about an hour or so later, we see these coins all being moved to other exchanges. So we had over 11,000 Bitcoin worth 235 million transferred from Gemini to Zappo, another one back to from an unknown wallet to Gemini to an unknown wallet. We had an unknown wallet back to Coinbase. So the question is, what is going on here? So it seems like you could be seeing a lot. I mean, we can only guess what is actually happening here, but I wouldn't be surprised to see that some of these big funds that are in trouble, they're trying to get their book in order, and they're moving around large sums of Bitcoin and other cryptocurrencies to try to make good with certain creditors so that they can stay afloat. And so it's very interesting. You can see huge amounts of volume. This is, that's just occurring in this crypto space on the break of that 20,000 as they try to figure out what's going on. Is it Michael Saylor? What do you think? We know that he must be getting squeezed right now. Is Michael Saylor in trouble right now?
I just remember seeing a video of him now. He was saying, mortgage your house, find another way to buy more BTC, the hardest money on earth, when it was around 60K. Just imagine all those people that actually did that.
The amount of abuse he's getting on Twitter right now. Yeah. I mean, we spoke about it briefly in the last podcast. Mm-hmm. I mean, We had Tom Brady, Laser Eyes, Matt Damon, all of these guys, you know, on the crypto. All these actors all of a sudden became financial advisors. You know, the whole pump was there with all of these guys. And I mean, in hindsight, obviously that was the top. I mean, when you get that much euphoria and all the actors getting in, because what gives the actor the right to know, oh yeah, look, you know, buy Solana, buy this. And then
it's always a pump when it comes to, you know, mainstream influencers such as actors, you know, getting into these type of things. But, you know, even Cathie Wood was saying that BTC wouldn't go below the 200 moving day average, and the first time in Bitcoin's history is now oversold. But, you know, they're saying 80% of market share of BTC is now held by long-term holders, and these world movements
that is the problem,
signal
isn't it?
The bottom.
But this is the problem. If 80% are hodling, so it just shows that, I mean, you know, it's not like you've got like 40% of the supply that can just go push this back up again. But I mean, in a way, talking to some of our friends, some of the guys that are very heavily invested into the space, they are, you know, it's one common theme that they all say. This is great news. It's flushing out the garbage. It's flushing out the excess, and the strong projects will survive. So if you are a hodler and you are a believer in this space, then this is apparently a good thing. Right, this is what I heard. Unless you don't have any money left on your 90% drawdown, but it's apparently a good thing. This is what they say, and so we will now see like which projects will survive, which ones will be taken to the woodshed. And I mean, this is what they all say. So I take their word for it.
I think if you look back to, you know, the early 2018 crash in crypto, you have to look at the amount of people who were exposed to crypto then compared to this current bull run that we just had. It seems like the whole world was pretty much exposed to crypto. So then it's like there's a lot of people who've been burnt. Now, in terms of a lot of these altcoins, especially all the scam coins, etc., you've seen that we've got a lot of people now have probably lost trust in certain parts of crypto, especially those type of coins. So it'll be interesting to see, like you're saying, a lot of users, a lot of bad coins have been kind of flushed out of the system now, hopefully for good, and you just got like the top quality projects that continue. But, you know, it'll be interesting to see how many people have been burnt now, like especially if you look at, you know, the comparison when you make into stocks, like Robinhood was valued crazy high because it just, you know, the market assumption was more and more people will keep on entering the industry. But now, you know, a lot of those guys have also been burnt, and are they going to return? You know, it was so easy to get into stocks with apps like Robinhood, and also crypto with, you know, the suite of different apps, you know, FTX, Binance, Coinbase, etc. You know, what's it going to really take, Rajan, for crypto to have its bull run again? With stocks, you have some that have been beaten down so much, but eventually they're going to return to the mean because with earnings, they're able to, you know, demonstrate
the fundamentals will take over for some of these stocks, right? Yeah,
exactly. But what is there for a lot of these crypto coins that aren't the mainstream ones?
I mean, if I look back to, because I was involved in crypto, you know, small back in 2017, and again, that from my knowledge, you know, it might have been a different reason. I wasn't really as versed as I am now into the space, but in 2017, 2018, we just had a bubble. There wasn't really much behind it other than Bitcoin and Ethereum. They're going to take over the world. Now, like we've been told numerous times, there's actually legit projects. There's some really good things happening. There's a lot of different applications. But the difference this time, we've just had a $50 billion coin, pretty much just, you know, that's a lot of money. 50 billion, you know, people have lost, and you know, it is taken away many people's livelihoods. What the crypto community often say is that the community is what separates crypto from other projects. The community is so strong, everybody comes together, everybody draws together, and they become stronger from this. But again, I think these things go in 2 or 3 year cycles. So, I mean, for me personally, I think now the promise has been there for all of these different applications that might come out of the woodworks. But the thing is that we actually now need to see actual use case in the mainstream space. So we've seen a lot of gimmicky things, like, you know, you've seen Elon saying that you can buy Tesla merch with Dogecoin. But then if you think about it, those guys, you know, that merch that they sold for Dogecoin is if they've still got Dogecoin on the books, it's worth 90% less, right? So the thing is that as a business, all these people that took crypto as payments, and if they didn't convert it straight into dollars or whatever currency they wanted to change it at the point of sale, that is virtually worth nothing. It's down 70, 80, 90%. So it's still very, very risky for a business. And I think a lot of them do it as a bit of a, you know, a gimmick and a promotion type thing. But when it comes to a point where it can actually be a use case that is very, very useful and it will make people want to do it, then I think that could be the next catalyst. And when that will come, I don't know, so.
I agree with you there. I mean, in terms of this bull run, obviously a lot of people going in for the capital appreciation of their crypto, but as well as the stable coins. Many investors believe that stable crypto, kind of offering higher yields up to like 18% or even higher, they believe those returns were guaranteed, but it was always unsustainable and only worked as long as more and more users entered the pool and crypto gains continued to at least stayed at their elevated levels, right? This is the difference, that these type of unsustainable high yield rates trying to attract people in kind of have to be scrapped. It needs to be a bit more kind of sustainable.
So talking about stable coins, we obviously had the collapse of UST, and we've had a few little scares in USDT, which briefly broke the peg, but it did snap back quite quickly. And over the weekend, Magic Internet Money, which is a smaller stable coin, and it had around 300 to 300, I think 350 million market cap. And that also broke the peg, and it actually went to 93. And as we saw, 100 million come off that. So about a third of the market in terms of value of that coin basically got taken out. So I went, oh my God, is this the next one? But now taking a look at it right now, it's actually 98, 91. So it hasn't got back exactly to the peg, but it actually has made a comeback, which is actually a good sign for this one over here. So we can see here it was at $1, and this was actually on Friday evening. Actually went to below 94 cents. So I was thinking to myself, is this another stable coin that's going to hit the fan? Well, it does look like it has bounced back well, and that is exactly what actually happened to UST as well before it just started to go again. But this is a much smaller stable coin. But again, if there's another one that fails, I mean, how confident can you really be? Especially if you've got big money in the game.
I think it's really up to the big whales to pretty much like stabilize the market if they can somehow, if they have taken games. Like, it's really up to them, because, well, we're in this really difficult market now that, people think, oh, hopefully there'll be a turnaround. But the thing is that you've seen this massive bull run we've had for the last 14 years or whatever, and it's been Fed supported. Now the Fed are doing the opposite. They're pulling out money from the market. And so I would say to anyone who's looking to, let's just buy the dip, that we're in a completely different time now. And if they're extracting money from the markets, it's going to do the opposite of what it's done for the last 14 years. And it's going to continue doing that until there is some kind of Fed intervention. It would really be interesting to see how much Biden kind of like holds them back. Obviously he wants to be reelected, but with a market like this, I think his chances are pretty slim.
Biden actually respects the independence of the Fed, but I think it's pretty much a foregone conclusion. They're trying to force a recession, and I've actually been speaking to a few people about this, and they all agree that that's the best course of action, because runaway inflation will be worse than a forced recession, right? To get inflation under control is the number one thing. And the thing is that, of course, there's a lot of aspects of inflation that monetary policy can't actually solve, but to try to dampen demand, that is the best way to ease the supply chain pressures with not so much demand on the books, right? So that is what they're trying to do. Whether it be successful, I don't know.
Yeah. We've got this dichotomy in terms of having massive amounts of inflation that we're seeing today. Normally, you can use some monetary policy to affect it, but never has there been such a, we obviously have to have demand and supply in equilibrium, but all of the things that need to be done are all supply side, right? And obviously you're trying to drop the demand by raising rates. But the thing is, like you were saying in the last pod, is that we need to get this Ukraine-Russia situation sorted out, get the supply chains back, because we're going to have a world where hundreds of thousands, potentially millions are going to go starving, right? So it's much more than just the inflation piece, because, without Ukrainian wheat and Russian exports, it's going to be, I don't know, the politicians really need to step up and not just look at their own pride. They really need to look at, what's best for the world, what's the best utilitarian solution behind this, because it's a world problem and it's a supply chain problem. It's a supply issue, not a demand issue. Obviously, there's high demand, but there's only so much monetary policy can do. And obviously, they can crash the markets, they can crash the economy, but still, even they do that, there's still not going to be enough stuff around. So to supply even just basic demand.
Yeah, I mean, that's exactly what it is. I mean, the Fed, this is all they can do. This is all they have in their arsenal. So, I mean, they have to do it because there's no real other thing that they can do. And they're just hoping by reducing demand, it can, like I said before, help with the supply constraints. But again, those constraints are so big right now that they can't really do much. enough to really help the situation. And solving this Ukraine Russia war is the only thing that I think is the immediate solution to helping, especially with the energy prices. And if we look at inflation as a whole, energy pretty much accounts for most of it, and everything is a byproduct of energy. So the thing is, to get these energy prices down should be the number one priority, and the number one way of doing that is by trying to negotiate something between Russia and Ukraine. But today I'm seeing that Sweden and Finland are close to joining NATO, and I mean, Putin don't like that because Russia shares the border with Finland. So, I mean, it doesn't seem like Europe are doing anything to sort of try to diffuse this situation. If anything, by adding more countries to NATO, including Finland, and these border countries with Russia, it's going to exacerbate, if anything. So it does not look like this is going to be something that these guys have. And then today we actually saw the French, not today, it might have been today, but we had the French elections, and Macron actually lost overall power. He didn't have the majority, and there was a record number of votes for the far right candidate and the far left candidate. So you can see that the way people are voting in Europe, like they're not happy with the current regime, and it could actually be like this. We already know in Hungary we have Orban, and when these other elections start coming in Europe, I think a lot of these people now, although they might agree with, we were talking about this earlier, they might agree with, the principles of helping Ukraine, but if it's really affecting their livelihood and a lot of people are really struggling, then you've got to think about number one, and then the vote will then reflect that. So
the thing is, that's also lagging. That's the problem.
That's the thing. It's a massive lagging thing. Yeah,
it's not like you can change things anytime soon. And again, my heart goes out to everyone who's struggling out there and will continue to struggle, because you're going to make it harder for everyone, basically. And like I said, energy prices ain't coming down anytime soon. I guess the only way is if some other kind of COVID variant comes along or something like that, and it kind of crushes demand because everyone has to be at home or something like that. I don't see anything like that happening.
Everyone turns into a China right now. Got shut down on 20 cases shut down.
Yeah, exactly.
Mass testing.
Yeah,
but on the back of that, just want to just delve on quickly onto the markets and what we've been doing. We've got a shortened week this week. Today the US markets are closed, but let's just look. Our trusty S&P chart, and we can see we did have that huge break below that lower trend line, which has been held for so long. I've talked about how we've had 4 pin bars basically bounce off that line, but you could see that this week we had a full red bar, a full juicy red bar, full conviction below it, and then now we're trading below that mark. So the question is, do we come? And does this now act as resistance from previous support? If we can break back above this and go back into previous range, that'd be nice. But, I could really see this now acting as a resistance level, and we'll hit against this and then start teetering around it, or maybe go for a fresh leg lower after that. I mean, if we look at this trend line that I drew back all the way to, this was in September 2020. So if we actually drop another, it's about 500 odd points, we could basically get to the September 2020 lows, which will be wild. Right now, we're pretty much trading at the lows seen back in the end of November in 2020. So we've already wiped out all of 2021's gains, and we're actually trading at levels not seen since 2020. So everything does look super bearish here. The only positivity I can see this week is that you can see these sort of troughs. We go in these waves. We had this nice wave up, and now we've had this really sharp move down. I mean, literally, we have dropped from 4,100 well over 10% in about 4 bars. And and markets tend to go in waves. So we could see a bit of a bounce here and have a little wave up before we go back down again. So that is what potentially can happen. For me personally, I said last week that I was short energy. That turned out to be good. I covered all my energy shorts right now, to no point holding it. So it was a nice trade there. And then other than that, really, I'm just trying to pick some bottoms. I think a lot of these crypto stocks have been hit so massively, like Mara, Coinbase that you were saying before. So there's some good opportunities to sell some far out the money puts, or maybe even take a flyer going long stock, just because the implied volatility is so high that the premiums are really highly juiced. But if crypto can stabilize around this 20,000 mark, I think we could see a little bit of a bounce in some of these crypto names. But other than that, I mean, we're going down just in unison everywhere. It's just take your pick in terms of which one, if you want to go long anything. But everything I'm doing right now is just very small, just nibbling, just no conviction in any position that I'm taking right now, because clearly the trend is down. And until that changes, it'll be very difficult to, with gusto, go one way or the other. But what about you?
Just going by the phrase "don't fight the Fed," in terms of I haven't really made any trades. Just kind of holding on, seeing where the market goes, and like we were talking about earlier, unless there's some kind of capitulation or change of attitude from the Fed, or a ceasefire between Russia and Ukraine, it's unlikely we're going to see any type of meaningful sustained rallies anytime soon. So yeah, that's just my opinion. I'd love to be proven wrong and just see a massive rally, and I wouldn't care if I didn't catch the bottom. You just want to have it not go down sustained. But like we're talking about
all
on our
bag
last
holding
podcast,
right now. A lot of us are bag holding.
Exactly.
We don't want to be bag holding, but sometimes when you get some of these moves that are so sharp to the downside, before you can even react, you're just so far offside. Exactly. So I guess what I've been trying to do, rather than putting more money in, I'm just adjusting some of the portfolio. Yeah. So for example, it's some of the stocks that I think are dogs selling out and then just instantly getting into another one, or trying to make the portfolio a bit more compact, not have as many names, try to shift some of the money from one stock to another stock, rather than adding extra capital. So that's what I'm doing a little bit. Just if I see a few nice bounces, take a little bit off the table and put it into something else that I think might be all right. But that takes a lot of work, and it needs to be you need to be just at it all the time. But sometimes just just got to just leave it, or just get out, and if it makes you feel better. There's no right answer right now. You never know. You might get out tomorrow and it'll be the best decision because we go down another 20%, or that might have been the bottom and you're like, damn it. It's just very difficult to tell. And again, it's always about your time horizons, but time horizon can always be lengthened as long as you need the market to rally. So I don't really take much credence in that time horizon thing. Kathy Wood's time horizon must be like 35 years now, until she gets Bitcoin 500,000, I don't know, but who knows? No one knows the future.
But remember, like we said, tapering is happening. They're taking money off the balance sheet. So it's going to be really tough for a sustained rally anytime soon. So best thing is don't buy the effing dip. Stay clear.
Don't buy the effing dip. And wait for the McRib. That's all we need to do. Right? That's it. Wait for that damn McRib. Make sure there's a bit more onions and a bit more barbecue sauce on there, and let's just wait for that, and then that's it. All right. Well, if you liked what you heard, please like and subscribe. If there's any other topics, if anyone wants to leave a comment about what you'd like us to talk about, feel free to do it.
We hope in our next episode that we don't start off with the market is crazy right now. We hope it's like, we're having a nice sustained rally.
What do we talk about today? What should we talk about? Yeah, that would be nice.
Hopefully it'll be something positive, because there's no hiding place in the market right now. It seems you just have to be really lucky to catch the good stuff. Hopefully our Lord and Savior Elon Musk, does something, buys Russia, or does something like that to get things in a better state. But we'll see.
All right. Well, we'll catch you on the next one.
Thanks a lot, guys.